Well, I hope you're having a good morning so far. We have plenty of stocks to track, so without wasting any time, let's get straight to it. Our entire research team is joining in to help us prep for the day. So let's welcome them on board. Okay, we have two Mangalams there instead of one. Great. But let's go across to Abhishek first up. Abhishek, SBI is on your radar. Good set of numbers.
Well, strong set of numbers coming in, Sonia. Look at the profit number. That's the highest quarterly profit that SBI has ever reported. ROA continues to remain above 1% on a second quarterly basis. So management has said that it will remain above 1% in the near term. The net interest margin is at 29, quarter high of 3.5%. Cost to income ratio or the operating efficiency is one of the best in last 23 quarters. Asset quality, they are the best in last 7 years or even more. Both the gross NPA ratio and the net NPA ratio. Annualized credit cost is at a mere 0.2% or 20 basis point. So strong operating profit growth of about 35.5% YOY and about 19% sequentially. The treasury profits have bounced back this time around versus the loss that they had in the previous quarter. CD ratio or credit deposit ratio, that's the best in 11 quarters. On the flip side, the deposit momentum is weak, growing at just 0.6% quarter on quarter, and the fee income has also remained weak for second quarter in a row. PNL, both the NII and PAT is ahead of our poll. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Mangalam. Mangalam, ITC, those numbers look red hot.
They look smoking hot, Nigel. You know, they have a product called Double Burst. And these numbers are exactly that. For ITC, the first burst came when the budget tax hike was lower than expected. And this second burst is the stellar set that the company has reported. Exceeds expectations across all parameters. In fact, the cigarette volume growth at 15 to 16% is much higher than our estimate and the street's estimate of anywhere between 8 to 11 odd percent as well. The revenue mildly lower than expectations, but that was largely because of the weakness that we saw in their agri business, and that was understandable because of a high base, and there were restrictions on exports of wheat and rice products. But here's where the good numbers came in. EBITDA 6,200 crores. We were working with a number just shy of 6,000 crores, and net profit over 5,000 crores. The cigarette business showed a revenue growth of 17%. We were working with a number of 12 to 13%. FMCG, 18.5% growth. The margins expanded out there as well. The hotels business, a great set coming in out there as well. 50% jump in their revenues, near tripling of their EBITDA. And we had the paper business, which showed about 12.5% growth in their revenues. So across all parameters, it was good numbers. The stock is at a record high post-budget, expected to continue to be higher. And to add to all of that, they've also announced a 6 rupee dividend, so that acts as a bit of a sweetener.
I thought it was a pizza called Double Burst, right? A double cheese burst or something. There's a Double Burst cigarette.
Yes. And for someone who doesn't smoke like Mangalam, he knows quite a bit.
He's well informed.
I don't know whether he's doing it on the quiet.
Post-Friday, quick drag. All right, Mangalam, what about Marico? What's the highlight there?
Well, for Marico, you know, the numbers were absolutely in line with expectations. And these expectations, again, were set by the company itself, and they gave the third quarter preview. So if you just take a look at their revenues, absolutely in line with expectations. We had the EBITDA as well, largely, you know, as Street was expecting, 456 crores versus 450 odd crores. And the net profit, 333 crores versus 317 crores. So you'd wonder why after a revenue and the EBITDA meet, the net profit was slightly higher, because the other income came in at 40 crores versus 22 crores. Stripped of that, again, in line. Parachute rigids grew by about 2% in volumes. Value-added hair oils, that's where the problem is, because consumer sentiment is weak. So we saw a revenue decline of 3%, but Saffola does well for them. They guide for their EBITDA margin to be in that 18 to 19% band for this year, with a medium-term revenue guidance of 13 to 15%, led by 8 to 10% volume growth. So in-line set of numbers, the improvement in sentiment should aid the stock. See mild green out there. And on the cigarettes front, I have to tell you, those who don't smoke actually read the packages, which is why I know a little more.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Abhishek. He's tracking a whole host of companies who reported their numbers. Abhishek, go ahead.
Well, to begin with M&M Finance, they reported January business momentum, which was weak along with the Q3 results. So Jan disbursements are at 5-month low of 4,000 crore, down about 14% month on month. Collection efficiency in Jan is down to 95% versus 98% in December. For Q3, the total disbursements were up 22.5% quarter on quarter, which led to strong AUM growth this time around, coming in at close to 17% YOY and about 4.8% sequentially. However, they have felt the pressure on the cost front as they borrow more from banks, and we have seen banks increasing their lending rates. So the spreads are at 7.4% versus 7.5% for the H1. So spreads have declined due to pressure of cost of funds. Asset quality, gross NPA ratio is at 15 quarter low, and net NPA ratio is at the lowest in last 8 years or even more. PNL, both the NII and PAT is a beat on our poll. Manappuram Finance, they are losing the gold portfolio to banks. We had covered in Fin Street that banks are getting very aggressive in gold financing business and taking away the market share from NBFCs. So gold loan share is now at 58.4% versus 62.6% in the previous quarter. Gold tonnage is at 6 quarter low, or the second lowest in last 21 quarters. That has also had an impact on the AUM growth, which is the slowest in last 6 quarters. AUM growth is a little below 5% on a YOY basis. Gold loans are down 9% YOY and about 3% sequentially. Calculation shows that net interest margin might have declined on a sequential basis as well. And up 20.5% YOY, but a decline of nearly 2% quarter-on-quarter. Profits up 51.5%, but down about 12.5% quarter-on-quarter. The last one, Paytm, contribution margin of more than 50% has led to first time ever EBITDA being in black for the company. So the EBITDA is a positive figure of 31 crores this time around versus a loss of 393 crore on a YOY basis and about 166 crore on a sequential basis. The total income is up nearly 39.5% YOY and about 6.3% quarter-on-quarter. The net loss, that has declined both YOY and quarter-on-quarter. Back to you.
All right, thanks a lot for that. So that's on Paytm as well. We got that. But let's also keep our radar on Interglobe Aviation. Now, as we know, the entire aviation industry has recovered from the throes of the pandemic, and the numbers have been exceptional this time around because of a big pickup in air travel. Now, you've had a revenue growth of 61%. Of course, same time last year is not comparable, but nevertheless, these numbers are looking very good. It's an 11-fold rise in profits compared to what we saw same time last year. But even the internals have improved quite a bit. So all the metrics for profitability have gone up. The yield is up almost about 22% year on year. Load factors have improved. The RASK, which is the total income per available seat kilometer, that has gone up by almost 29%. But the only disappointment is that the debt is also up for Interglobe Aviation. So the debt is now, has gone up to almost 44,470 crores, which is a 26% rise in debt for Interglobe Aviation. So keep an eye out on that. But I'm going with green because overall the numbers are looking pretty good. Let's go across to Vivek. Tata Power's numbers also look quite decent this time around. Vivek, what's the fine print?
Well, absolutely right. Tata Power, good set of numbers. At least optically, it's a beat across the entire poll that we had. When you're talking about the net profitability, up almost 90% on a year-on-year basis. But let's delve a little bit deeper into it. Mainly, the profitability was aided by the strong performance as far as the Indonesian coal mining business, aided by higher coal prices. Also, this time around, positive, of course, is the fact that the renewable energy EPC margin has come back to the normalized range of 5 to 6% that the company had guided to earlier. Also important to keep in mind that the revenue of 430 crore was for the earlier period was actually booked in this particular quarter. This will not continue in Q4. Key takeaways from the con call that the management held, the Odisha distribution business AT&C losses have come down quite significantly. That's a positive. And also when you're talking about the solar energy order pipeline, it's quite strong, almost 15,440 crore worth of order book and 3.9 gigawatt worth of orders in the pipeline. Lastly, the key monitorable and most important thing to track, the management has said that the Mundra power plant long-term PPAs are most likely going to come into play soon, and that continues to remain the key monitorable as far as Tata Power is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's talk about a couple of cement names. And Dalmia Bharat, well, those numbers look very, very good. The stock ended higher in Friday's trading session, but it should get a thumbs up even today. Revenue growth was solid. And keep in mind that they have exposure to East as well as South India. And pricing in East was far better than the rest of the country. So they gained on that front as well. The margins improved to around 19% odd. And that's despite the fact that power and fuel costs shot up by close to around 44%. On an EBITDA per ton, well, it came in at more than 1,000 rupees, which is a good improvement on a sequential basis as well as on a year-on-year basis. And it was backed by higher volumes. Volumes were up by close to around 10%. Besides good numbers, they also announced that they've gone ahead and bought 5 million tons from the JP Group. Remember, they already announced this in December. But now, in fact, they've taken part of that agreement forward. It was close to 10 million tons. They've taken close to around 5 million tons. Integrated unit for captive power as well. Enterprise value from 3,230, which works out to an EV per ton of around $75 per ton. So positive on Dalmia. Unfortunately, on JK Cement, well, you expect the stock to open up in the red. There was good revenue growth, but that's where the good news ends because margins did get compressed to around 10% odd, and they're struggling on the cost parameter. Both power and fuel costs as well as freight costs they remain elevated, and the profit number is much lower. That's because, in fact, the finance cost has moved up since they've commissioned a couple of units. Depreciation as well as high, so expecting that stock to open up in the red.
Okay, so lots of stocks in focus this morning, and here's a quick recap in case you missed out on any of them. Stocks with positive news flow. There's SBI, ITC, Marico, Tata Power, M&M Finance, Interglobe Aviation, Paytm and Dalmia Bharat. While stocks with negative news flow today, Manappuram Finance and JK Cement. Plenty of other stocks on our list, but we take that forward on the other side of the break. So let's take a quick break.